We are welcoming our guest on the show tonight, Peter Cardillo, Chief Market Economist, Spartan Capital Securities LLC. Hi, Peter. Welcome to ET Now.
Good to be here.
Right. Peter, tell us, Bank of Japan announced its first interest rate hike in 17 years from, a negative 0.1%, but still keeps the rate stuck somewhere around, 0 to 0.1% rate. What will this mean for the economy? Because now the banks will park the capital with the Bank of Japan instead of businesses, because earlier the negative rate was meant to encourage the banks to park capital with businesses to jumpstart the economy.
Yeah, well, this is a big deal because obviously after 17 years, Japan turns to normality. And the fact that they abandoned the yield curve control is probably even bigger news than the fact that they're going to zero. Now, it's going to take some time unless inflation roars its head much above 2% of their target rate. You're still looking at zero interest rate. So, as I said, if inflation should really rise above that 2%, then obviously not far in the future distance, we'll be looking at the first rate hike. But again, it'll be somewhat minimal because we're back at zero. Of course, quantitative easing is all done with. And so I think the impact on the Japanese economy for now is not going to be all that negative.
Right, Peter. Also, the Federal Reserve and the other central banks yanked up rates to, rein in the galloping inflation. But haunted by stagnation and deflation, the Bank of Japan kept its main rates negative so far. Now, when other central banks are holding on to the rates, and there are signs of perhaps rate cuts also coming in the future, even though there's no clarity on that. But Bank of Japan comes in with a rate hike. What is this likely impact going to be on the stance of other markets?
Well, one of the main culprits of negative zero rates for 17 years caused the value of their currencies to plummet against the dollar. And now, of course, this morning on this news, we still see a strong dollar. But that all could reverse if and when they begin to raise interest rates. Again, like I said, it's at zero, and it doesn't necessarily mean it's going to have a very negative impact, especially on imports and exports as well. So I think we just have to wait and see how this plays out. And again, the bottom line is that it's all about inflation.
All right, Peter, thank you so much for joining us for the insightful conversation. We will have to let you go on that note. Thank you so much for joining us.
Thank you.